Hey, everybody, and welcome back. We are starting our second episode here of talking with Ben Mathews from Northwestern Mutual about some of the different type of insurances that we can use to protect the homestead and protect our homeownership interest. Now, last week we talked about life insurance, the difference between whole and term, and all the things that go into that. But this week we want to talk about something that's connected, but obviously a little bit different, and that's disability insurance. So, Ben, let's just start with again, let's make this 101. Like I've never even heard the term disability insurance. What's the breakdown? What is disability insurance in the most basic form?
Yeah, basically it's protection insurance you have in place that protects your income and your money earning abilities. So essentially, let's say you have disability insurance, you're unable to work because of a chronic illness, because of a mental health issue, physical ailment, whatever that is. That disability insurance essentially protects your ability to make money and earn an income.
Okay. Now we're going to get into some, not specifics, but we're going to get into some cases about how it gets applied and everything like that. But I think the first thing that we start to get into this is this word disability, right? Disability, I think a lot of us think of is I've lost my leg. I am mentally incapacitated in a vegetative stroke-like state, right? We think of the absolute highest hilt of what a disability could be, but disabilities can be a very large spectrum of things. So maybe if you could, what qualifies as disabilities? Maybe just again from a basic standpoint of what a disability constitutes, and then some lesser known examples of what a disability could be.
Yeah, absolutely. So a disability is basically, to put it as straightforward as possible, is a health ailment that limits or inhibits you or prohibits you from being able to do your work, at least as it applies to disability insurance. So the top three forms of a disability that anyone issues a claim for: chronic illness, so for example like cancer, things like that, things that you have to treat, takes a very long time usually to get over, if you get over it at all ever. Mental health illness like depression and anxiety. And those two tend to not be the first thing that comes to people's mind, but even if you're physically okay, but mentally you're not able to do your job. For example, as well, alcoholism, going into alcohol rehabilitation qualifies as a disability for disability insurance. Those aspects that just prohibits you from being able to do your work is what qualifies as a disability foundationally. And another example too, because often this comes up a lot of the time, not everyone's out there physically working as a part of their job. If you are, you definitely need disability insurance. But even if you just have a desk job, you're working in front of a screen every day, chronic migraines can qualify as a disability. If it prohibits you from being able to look at a screen for more than 2 minutes, if you're a software engineer, you can't work. That is your job. That's your bread and butter. Or chronic migraines from, again, depression and other aspects like that. So it's a very general kind of consensus, but really putting squarely in as what it is again, something physical, mental, health related, that prohibits you from being able to work and function like you normally would.
Yeah, I think that like you normally would part is key, because there's grades to this, right? I mean, obviously, if I am a construction worker and I use my hands, and sorry to make a graphic example, but I lose an arm, that completely prevents me from going back to the line of work that I was in, right? But I think the one and you mentioned this, really is kind of these more of a mental disorder, is even people that don't have these physically demanding jobs, the need for disability insurance is still there. And you could have let's say, for example, let's take that maybe concussion and screens example for one, because I think for a lot of us that do have jobs that rely on a computer at some capacity, this could be a lot of people. And you get into a car accident, and you get a concussion, and you get post-concussive syndrome. You may be on a doctor's recommendation that says, hey, you have an 8-hour-a-day job, and 5 hours of that are meant to be on the computer, but we really only recommend you be on a screen for about 2 hours at a time. So now it's like, okay, well, I'm not disabled to the point that I can't open a computer, like, right, that I haven't gone blind, right? But I can't do the full extent of what my job is. So I guess the question that I come into when we start getting into, what qualifies as disability and when this starts to kick in, is there a way in terms of disability insurance that maybe there's a certain amount that you're entitled to based on the plan you're in, but based on the type of injury you've had, you only need a portion of it? Or is it just like all or nothing? How does that kind of work with this? Is there an assessment that gets done? Like, just maybe walk me through the process of if somebody feels like maybe they have had an injury recently, maybe they have disability insurance, but they're worried about taking the whole thing or anything like that. So maybe just, and maybe I'm just not even asking it the right way, but I hope you're picking up what I'm putting down in terms of, do you have to use like all of it, or are there grades to this in terms of how much you get to use from your policy?
Yeah, absolutely. And there are different types of disability insurance you can purchase. The most common one that you would purchase is what's called as a modified own occupied. And basically what that
Sorry, real
is,
quick. Modified own occupied?
yeah.
Modified
So
own occupied. Okay.
basically what that is that if, let's say, using that same example, you're a software engineer, because of a car accident, you're unable to look at a screen more than 2 hours a day. That's even less than part-time work you'd be able to do. And your work is working with you on that. You're only working 2 hours a day, but your pay is going to reflect that. While you're not at zero, you're significantly less than you were before. So the disability insurance would kick in to cover that gap as long as need be. Now, by the way, and I should have mentioned this earlier, that as long as need be, at least when it comes to Northwestern Mutual long-term disability, can be until you're 70 years old. And that'll go for as long. We have different riders on it that essentially allows for adjustments for inflation, all that kind of stuff. But however long that is, and the average time someone's out of work for a disability event, depending on your age, is about 2 years, 2.5 years. I mean, just imagine, we've been talking a lot about goals in our recent videos and stuff like that, reaching those long-term goals. Imagine dropping down to 60%, 50% of your income, and things are tight right now. They could be tight right now, no matter what your income level is. Imagine how tight they would be when you lose half or close to half. And that's really what we're talking about. And what I do quite a bit, there's employer provided group disability. All of those are different. Some are excellent, some not quite so much. But what I do is I come in and I fill that gap to get someone as close to 100% as possible. Because usually what an employer provides is about 60% of annual salary, which really comes down to closer to 50, 40% because of taxes, since it's taxable. And what I try and do is make sure that they're paid as close to 100% as possible, because it's in your employer's interest to not pay you close to 100, so you have an incentive to come back to work sooner. What I care mainly about is that your goals are funded and that you can have the time and the breadth of knowledge, knowing things are funded, to get healthy again and to go back to work when it makes sense. So long-winded answer to that question. One other thing I want to mention too, there is a unique disability insurance policy that's really only kind of geared towards people like doctors who have a very specific set of skills. Let's say you're a surgeon and you break all the fingers in your hand, and then now you can no longer hold your hand still. Your career is over at that point. Now, you can move on to a different position. It could pay more than you're making as a surgeon, but this disability insurance policy, I forget the official title behind it, but not very common unless you're in a field like that, will pay you that full benefit no matter what if you're in a different career. So there is unique stuff like that, but that's really only applies to someone who takes a very unique set of skills in order to do that position, like a doctor or a surgeon.
Got it. So Dr. Stephen Strange should have had disability insurance when he careened his Ferrari off the side of the mountain there. Now I want to rewind, because I'm drawing a little bit of a difference between the life insurance products and the disability insurance products, that I think I want to ask this question. When we talked about the life insurance policy, it was very much about the goals of not only yourself and the income that you produce, but also the goals for your family, about a spouse, kids going through college, things like that. And so when you think about what kind of policy you want and how much you want your monthly premium to be, whether it be term or whole, you're really thinking about those terms and purposes, right? You're thinking about their lifestyle needs and the lifestyle needs of you after you're gone. Whereas when we talk about the disability insurance, it's not quite so much wrapped up with some of the other people. It's very much about the position I hold, the income that I bring in per year, and then it's a kind of a matching to that. It's a matching to that income standard, not necessarily an overage standard for what I want to give to my kids and to my spouse. Am I thinking about that right? Is that kind of the difference a little bit in that life encompasses everybody else's plans and the goals and how long you want to set that for, whereas disability is really about just replacing as close as we can your income, right? There's not a situation where I'm going to get disability insurance for 150% of my income, right? I mean, it's most of the time it's going to be trying to get back to that 100% of your income with the insurance, right?
Yeah, that's absolutely right. And basically the way to look at it is you're protecting your income so that your lifestyle, your goals don't completely derail as a result of something out of your control. And the first things to stop happening if you have a significant income dip, stop contributing to 401k, stop any sort of investments, stop saving for this big purchase, saving for that. All of those stuff goes away by and large, which especially for things like 401k, it's not, even if it's just for a few months, that can cost you tens of thousands, if not hundreds of thousands long term of growth, which can be a few years of retirement, depending on what we're looking at. And not just that, but the other just lifestyle assets. Maybe if you're a single income household and something happens to you, you're only collecting 40-50% of what you were before. Maybe your spouse would have to go back to work for the first time in years. Things like that we're trying to prevent. Now, obviously, it's not going to make the situation better in terms of health. I mean, if you're going through a health event like that, it's not a nice time, but at least you know that your 401k is still being contributed to. You can maintain the single income or household if that's your situation. You can still save for these goals. You can be focused on you when you need to be focused on you. Now, one thing I do want to put out there, if you're right now, if you're watching this and you're like, I'm young, I'm healthy, I'm invincible. First off, you're not invincible. No one is. Secondly, though, that's great. Now's the time to get the insurance. We had talked about this with life insurance, how it's better to start younger when the premium would be cheaper. If you want to talk about when it's better to start younger, disability absolutely is, for several reasons. For one, yes, the premium will be less expensive. It jumps significantly the older you get because your risk is significant. Secondly, it is very, very difficult to get in underwriting if you have any health concerns, because it's a lot more likely you'll experience a disability event rather than an unexpected death. The chances of you going through disability are much higher, which is why it's a lot stricter. So if you are at the peak of health, do it now. Get that locked in. Even if you change careers, that disability, the private portion of it, not your employer provided one, is yours. You can keep that. You can, if you have a rider to add an additional $2,000-$3,000 of monthly benefit, you can do that without underwriting, and it's yours. And you have that peace of mind to know as your income increases, you still have that, even if your health significantly declines as time goes on.
So yeah, I mean, that to me is a no-brainer, right? When you are the healthiest that you're going to be. Let's start there for a sec. I do have a follow-up question, but let's just start here with this in terms of, okay, I am going to apply for disability insurance today. What do I have to provide? Do I have to go and get a physical? Do I have to just provide my doctor's notes? Do I just put the insurance company that's holding Northwestern Mutual, do I just put them in touch with my doctors? Or like how does that start, right? How do we even start a disability insurance application?
Yeah, absolutely. So the way that the whole process always begins is that we fill out a general application that would go to Northwestern Mutual that has specific information that's very necessary for this. And then you would fill out a medical questionnaire. Based on what you fill out, you will likely, and more often than not, even if you're really in good health, this is what will happen. Northwestern Mutual will have a nurse or some sort of physician come out to you to do tests like blood work and stuff like that. not on your dime at all. This is covered by Northwestern Mutual, just to collect what they need to collect. And they would also likely be in touch with your primary care provider if you have one, to get current records. This is true for anything. And Northwestern Mutual, you see this with any insurance company. Northwestern Mutual is more strict on this because it also has the highest quality in terms of insurances. And while it may be a pain, because it really can, it's inconvenient. It's not great to go through that, but it does give peace of mind knowing that Northwestern Mutual is not going to go under because they're writing bad policies. Just like how the housing market in 2009 occurred because lenders are writing bad loans. You don't want that with an insurance company, because the worst thing that can happen is that if whether it's disability, life, or anything else like that, is that when you need it, that company cannot, will not, or is just dragging its feet on paying out to you because they aren't stable or they're going under. So give that peace of mind in terms of that. There's a reason why it's strict like that. And then from there, it will go through underwriting, and then it either be we need more information, or premiums are higher or lower. That does happen too. Or, which is the worst case scenario, but it does happen, you're not insurable. And then at that point, if you're working with someone like me who can work with any insurance company, Northwestern Mutual is just my first go-to, we would start exploring other options.
Okay, that makes sense. Yeah, I mean, it's good to know that they kind of send somebody to, I mean, again, whether it's, wherever you meet them on their level or wherever, but it's nice to know that they're doing that intake with you. It's not you have to provide this burden of all these things, and it's on this expensive process just to get started. So it makes it a lot more financially easy on the front end to just be able to do this. Really, you're just getting started with the premiums and maybe a copay, or something like that if you have a certain health insurance. The question that I want to jump to next is about because obviously the physical limitations can be quite obvious, right? You lose your hand. That's obvious. We can all see that. Mental health has been so slow to be accepted in society because it's also not able to be seen, right? And everybody has their own version of it and perception of it. And we don't have to get into that. But what I do want to get into is a situation that happened with the Philadelphia 76ers in the past couple of years, right? And I don't really want to name names because I don't want to, go on record by saying anything along the lines of this. But I think a lot of people from this area might know that there was a certain player that we had a lot of aspirations towards, and that ended up deciding to sit out due to a supposed mental health issue. Now, there was a lot of speak in the public eye that this wasn't real, that this person wasn't experiencing this, but they were claiming it to get in or get out of, however you want to phrase it, the contractual obligations that they had. So here's the question.
Yeah.
Let's say I just buy this policy, right? And I have it for 6 months or something like that. And then, I have a good income, right? 6 figures or something like that. And then I claim I have a mental health disorder, whatever it is, that prevents me from doing this job at all anymore. I am now 100% disabled because of a mental health disorder. It's hard to take blood work on that. How does Northwestern Mutual go about, and this could be any company, right? We're just talking about Northwestern Mutual, right? But how do they go about addressing that and knowing and being able to prove beyond a reasonable doubt, or whatever the burden of proof is, that yes, you are experiencing that based on a traumatic situation or based on what's happened. And yes, we are going to kick in the full policy for you because of this. Like, what happens there? I mean, talk to me about, like, what do they do maybe on the mental health side? And then are there situations where that could happen? Or what are the checks and balances? Like, just walk me through kind of that step of this.
Yeah, absolutely. I mean, first and foremost, one big identifier to keep in mind when it comes to the disability offered by Northwestern Mutual, we're only talking about long-term disability, which means there's a waiting period of about 90 days before this will go into effect. So that's one big check, right? If you say, well, I was out for a week because I had migraines, true or not true, you're not going to collect on the disability. That's where short-term disability comes into play, which is usually just offered by your employer. So that's number one, which is also, by the way, why we always emphasize in our planning having 3 to 6 months of an emergency fund for an event like that. Now, you hit 91 days, you've been out, it seems like you're going to continue to be out, you'd be paid, reimbursed that full 90 days amount of benefit you would have been paid plus now you're now into the normal cycle of being paid. And let's say you have a mental health incident and that's why you're out. It would require things like a doctor to sign off on it, whether it's your primary physician or the Western Mutual, depending on what it is, will say, okay, we'll go to a doctor, get some sort of testing done, or some sort of official document saying, hey, this is currently going on. Even if it's, I'm in a psychiatric hospital because of X, Y, and Z. One thing to remember, though, which is why it's a benefit if you're going to do an insurance policy, even if it's not Northwestern Mutual, but to do it with a mutual company, which means it's owned by its policy owners, is that Northwestern Mutual gives the benefit of the doubt to its policy owners because the policy owners own the company. So it's Northwestern Mutual's best interest to serve them. On one aspect of it, that's why underwriting is so strict, right? That's a service to all of its policy owners, that they're not just bringing in people who are such a high risk that it puts more of a risk on the rest of the companies for survival. The second portion of that, though, is that when you need a claim, the company is going to try its best it possibly can to make that happen and to give you the benefit of the doubt with some common sense gatekeepers and stuff in the way. And in terms of its generosity, an example of this, there's a waiver of premium benefit that we put on all of our disability insurance policies, or excuse me, on all of our life insurance policies, no matter what. It puts an extra few cents on the overall premium. It just doesn't make sense not to. And what that says is that if you go through a disability event, Northwestern Mutual will take over the payment of those premiums for X amount of time. So if, let's say, you go long-term disabled for 10 years, you have a permanent life insurance policy that costs you $500 a month, Northwestern Mutual is saying, we will take over that payment. Okay, so let's say you actually have a disability, you never reported it, you never took work off, and then Northwestern Mutual finds out that you had that. They will go back and they will reimburse you every dime you spent in premium during that period, because you had qualified for the waiver of premium benefit. So there's some very unique cases of that happening. And I'm not saying that Northwestern Mutual is going to come knocking at your door and be like, did you actually have a disability event you didn't tell anyone about? But what it does demonstrate is that while, yes, there are gatekeepers, Northwestern Mutual also just wants to make sure that you're getting what you're paying into, because you're buying this, you own this, and that you're being made whole as soon as possible.
I would think that a company like that, especially because they have been in business since the 1800s, basically, right? Like, right? Yeah. For every, let's say you have had somebody who's been paying into Northwestern for 10 years with a life insurance and a disability insurance policy, and they finally do need it. Do you think that they're going to speak highly of Northwestern if Northwestern gets them on a technicality, a small gray area technicality? No, they're not going to speak warmly of that company. Whereas if they say, you know what, you are right in this, you are right where we are, and we're going to offer you as much as we can. We do want to give you the benefit of the doubt, and we do want to pay you. That person's going to create 5 new customers for life for that company. So I think it would be in the best interest of Northwestern to honor their policyholders, to make sure that they don't screw people around on ticky-tacky, technicalities. They want to make sure, like you said, common sense, helping you out, things like that. Here's a question that I have for you as well. When I'm disabled, most of the time, it's not only just a return to my lifestyle, it's also medical payments of things that are going to go on during that period, right? I have to get better, right? If I had that car accident, I have a concussion, I have post-concussive syndrome, well, I have to see a neurologist, right? I may have different things done for me over that period of time. So is there anything built into a disability insurance policy that covers not only a return to that income level, but also a payment of the medical payments that are going to be required of that person during their recovery? Does disability cover that as well?
So it doesn't. Yes and no. So it doesn't fully encompass every medical cost that it would encompass with that. There are some laws and regulations with it. The government, by the way, wants you to go to work sooner than later too. It's not just companies in general. And that's number one. And secondly, though, there is what we call a catastrophic benefit rider. So let's say you become totally disabled, or if it's just so extreme to where you're going through considerable rehabilitation or what have you. Up to a certain limit, we can add an additional benefit on top of the monthly benefit. That could vary from $500 extra to $2,000 extra, depending on your benefit and everything else, to help cover those extra expenses. Now, there are factors where it doesn't cover it, right? You could be covering 100% of your expenses in terms of income, but your expenses have now jumped 150% because of medical needs. That's why outside of this conversation, you need to make a plan and prepare for all the things that life is going to throw in the way, because life does that all the time, unexpectedly. And why having an emergency fund, why having other sorts of savings strategically located is essential, because we want to make sure that you're made whole as possible. We don't want to go to the worst case scenario where everything else is derailed, where your quality of living goes down, where you need to sell your house and move to a neighborhood that you don't want to be in, but you have to in order to afford X, Y, and Z. So there's a lot of other considerations. And this is really kind of one of the many different aspects of it. But I would argue, if you're going to start somewhere, disability insurance is the place to start. Mm-hmm. And consider it like this. It's one of the things, for whatever reason, when I have conversations with people, it often is one of the most difficult things to push people to do, even though it can be relatively affordable. And what I'd like to propose it as, you have homeowners insurance on your house in the event something catastrophic happens. You pay into that hoping that you never see any usage of that. You have car insurance by law, and because, again, in case if something happens, you want to have that there, but you never want to get into a car accident. Same thing like this. Protect your most valuable asset, your ability to go to work and earn a paycheck or run your business or whatever that looks like, because that is your greatest wealth building ability there is. It doesn't matter if you are an investment guru. It doesn't matter anything like that, because guess what? Your ability to get up in the morning, go do whatever it is you do, is the change between success or not. And you want to protect that. And for some policies, since we're only talking about supplemental, so in a way your employer doesn't, that can be like $15 a month.
So let's
just go ahead.
So let's right there is you're perfect. You took me to my next question here. So let's talk about that. Let's talk about that. The idea of supplemental as opposed to an entire, right? So most people will say, hey, I sat down, and when I got hired for XYZ company, they let me know that I pay into a community or an employer provided benefit, basically, that would cover, so much of my income. I'm sure it's not 100%, right? Because it's a lesser, like you said, there's an incentive to bring them back to work. So when you talk to people and you talk to them, is their first, I'm assuming, and I'm going to just kind of spin a narrative here. You kind of jump in where you feel right or wrong. The employer is going to say, okay, you make $100,000 a year. As part of our company, we offer a 60% of that base salary with another little bit taken off for taxes. So it ends up being maybe about $50,000 per year that you'll still continue to get while you have a qualified disability, right? Then they have a meeting with you and they say, great, I just started at this company a couple months ago. I just wanted to make sure I'm good on all my my coverage, my life insurance, my disability, and my, all these different things. So here's the policy that my company's giving me is this 60% with the tax coming down to 50%. Now it's to you, right? And so you would say it's not a matter of us needing to get you 160%, right? To add a whole nother 100% protection and then the 60% on top of it. You guys really, again, just look to fill the gap, right? You would look to fill the gap between what the employer is providing out and what you would be offering, right? Correct? That would be a fair way of assessing that.
Absolutely. And one thing I would never recommend, or any advisor worth their salt would ever recommend, is that you drop your employer coverage if you're not paying for it. And here's why. So your employer, again, in that scenario, your employer offers 60% group coverage. You're not paying into it. It's like an employer benefit. It's one of those things like, hey, look how amazing we are. Come work for us, which is great. It is good. 60% really turns out to be 50, not 40%, depending on your tax bracket, because you're not paying that, which, by the way, that also usually tends to be a learning moment for my clients, because not everyone knows that that that's the case, because the employer doesn't usually spell that out.
No.
That's number one. Secondly, if you're not paying into it, this like with 401k, I always recommend that you contribute to the employer match at minimum, because that's free money, essentially. This is a free benefit. Take what's you're being is free. When I step in and say no, look at private instead, is when an employer offers 60%, but you can pay an additional $10 a month for additional coverage. The reason why I say no, or advise no, ultimately it's not my decision, is that, well, guess what? If you change jobs, that doesn't follow you. You don't own it. And that's where the supplemental is key in that aspect too. So yes, your employer provides 60% coverage. I would say we would cover that gap with tax-free benefit, by the way, because you're paying after tax. So if it's a $1,500 a month benefit, you're going to get $1,500 a month because you've paid into that with after-tax dollars. That's number one. Secondly, as long as you're paying the premiums, it's yours. So if you leave your job, you don't have to go through this whole process again. And if you're paying an extra $10, $15 a month to your employer, and you never used the benefit and you change jobs, guess what? That's that.
You've lost that value of everything that you had been contributing during that period of time.
Yep, absolutely.
So what about the situation? So there's a lot of companies, like Northwestern, that have been around for a long time. There's a lot of smaller companies that may not be there, right? You may need this, and in 6 months they may fold as a company. Maybe they've set something up for you, but maybe they don't, right? So that could be a gap too. But where I want to kind of drive to, I'm trying to think of the right way to word this a little bit. But before, let me come back to that, because I want to mull on that for a second. I'm pulling on a thread here that I haven't quite unraveled. Let's talk a little bit about the average disability lifespan. I would imagine that there is some statistics on this in terms of how long is the average American disabled for during their working career? Is that the right way to ask that question? Yeah, or how would you answer that, right?
So again, it's based off of age, gender, other aspects like that. But basically, the average comes to about between 2 to 3 years of an average disability claim, which doesn't sound forever catastrophic if you're not contributing to your 401k for 2 or 3 years. It could very well be catastrophic. As well, you can't, and your mortgage company won't be okay with you not paying the full mortgage for 2 or 3 years. Things like that does come up. So 2 to 3 years. And in terms of the likelihood for someone who's, let's say, who's a male, who's in their mid to late 20s, good health, who doesn't work at a physically demanding job, it's still a 32% chance you're going to experience a disability at some point while you're working. And if you're a woman, it's actually higher, because we're also considering things like complications after pregnancy, postpartum depression, things like that. Men don't have to worry about that. Women do. And so there's a lot of other aspects there too. And then it's also knowing that if you, let's say you're a female and you're married, you're expecting to have a family at some point, and you don't have that supplemental DI, it may be good to know that when you eventually do become pregnant, if it is a complicated pregnancy, you can take the time off still and not worry about, again, sacrificing that income. And that's really, again, key with this is life and being able to get through life what you need to get through without having income be the sole decision maker with everything. Because that can lead to scenarios like you're going back to work when you really shouldn't be. Or again, one example I mentioned just briefly, but it's a big one. Alcoholism is considered to be a disability. And if you go into a rehabilitation center for alcoholism, you can qualify for that disability coverage. That can be a game changer. I mean, allowing someone to be able to actually get their income and go and deal with that problem can be the difference between a fulfilling life and disaster. I mean, I don't have to give examples of how alcohol can be a disaster for an alcoholic. I think everyone knows stories like that. And that's just one aspect, right? So, and one thing too, I do want to mention as well, there are people who don't have any sort of disability. So while if you get by their employer, so if you do get 60%, which is industry standard, universal, pretty much, you can go to bed at night tonight and be like, okay, I need to have this conversation, but I'm okay for the most part. If you're a worker who doesn't get that, and by the way, that could be because you're a small business owner or what have you, you need to start calling somebody, because you never know what can happen. Because we're talking about how dramatic it can be going from 100 to 50. Imagine going from 100 to 0. And that is catastrophic, especially if you have no one to rely on. So that's another aspect I wanted to add into.
And that was, thank you for taking us that direction again, because that was kind of where my head was going. Because I'm thinking about, okay, well, that's employees, W-2, salaried, bi-weekly paycheck people. But what about independent contractors, right? I'm a real estate agent. I am, by the nature of my job, a 1099, only commission-based independent contractor. I don't believe that my company, I don't think a lot of brokerages do, honestly. I don't think this is just a knock on my company, but I don't think they offer that, right? I think it'll be hard for them to do that at scale. So let's say you approach someone like myself, a 1099 employee. Do you recommend a full coverage through a private, right? Obviously, since I'm getting 0 on the employer side, again, a common sense argument here would be, well, since you have 0 coverage from your employer, to make up the difference between what your employer is offering and what you need to get on private, well, it's 100% private. Because you don't have that ability, right? That's basically when you would go to that 100% policy. It's really, if you already have some coverage, you're only looking at that supplemental policy, right?
Yeah, absolutely. And when it comes to business owners, independent contractors, like both of us, I'm an independent contractor as well, it gets more complicated too, because this is also when more laws and regulations come into play. So we need to assess like the average of your 3 years worth of earnings, stuff like that, because it can fluctuate. And that's not just Northwestern being picky, that's federal government regulations, that's state government regulations. So that's number one. Again, remember, the government doesn't want you collecting more than you would be earning because they want you to go back to work at the end of the day. And that's number one. But secondly, though, on top of that, it's imperative too. It would be 100% private coverage. The downside of that, guess what? You're paying the whole premium for 100%, which can be like, depending on what it is, break over $100 a month, or high but under $100. Again, it's depending on what it is, which is a downside. The plus side, though, is that, hey, guess what? It's yours. You own it. And you don't have to, it's completely tax-free, 100%, as opposed to 40% of it being tax-free, and you're covered. And especially too, there's some unique policies too, where like if you're in a business relationship with someone else, they can get disability insurance on you because if you're a key person. And not going to go into that because it gets very, very nitty gritty and very case specific. But that's where it gets very unique to play around with. But essentially, yeah, it doesn't matter if you're an employee or not. Go ahead. You have to have some form of protection. And the only time I would argue when you're a business owner and you don't need it is if the business is so successful that if you step away, it will still be generating funds. Or if you're so successful with your investing that those investing can pay for your lifestyle. Guess what? Not that many people can say that. If you can say that, great. You don't count in this conversation. For the 95% of Americans out there who it doesn't qualify for that, you need to have some form of disability income protection.
All right, so let's wrap up here. I want you to just give us our kind of final 2 cents on disability insurance. Obviously, you've spoken with a number of people about this. We've had good conversations about this over the past few weeks and things like that. If you were to take somebody who this has not been on their radar ever, and in kind of the shortest period of time possible, you could deliver this one message to them that would encourage them to seek this out and to learn more about it, what would that message be?
Protect your largest income earning asset so that you can stay on track and live the life you want to live. Fundamentally, that's what disability insurance protection allows you. I like to consider it more of income protection insurance. That's what you're protecting. The disability, that word, it can throw so many different things in there. You're protecting your income. That's what you're insuring again for. And to demonstrate just really briefly how important this is from a planning standpoint, many advisors, and for the most part myself as well, will not work with someone with their investments or anything like that unless they have a DI policy, a disability policy, because everything would be going hunky-dory. And then if everything derails and they have to start liquidating all of your investments to pay for life, guess what? As an advisor, they might not want to take on that risk. So that's how important it is. If someone whose main livelihood depends on you investing with them isn't willing to do that unless you have this, that can kind of be a demonstration as well about how much we really do believe that this is important.
Wow. That's a pretty good way to wrap this up. And I think the last thing that I'll say on this, and the last thought that I've had as we've been speaking about this, we talked about life insurance in our first life insurance and the policies in our first video. But really, if I'm thinking about this, if someone was to create a tiered system of, okay, I want to start adding these things to my life and to my protections, I'd probably put disability first, right? Disability would be probably the first thing I think of. And then I can work towards that whole term life insurance policy as I move towards it, right? Would you probably recommend that disability is probably the first domino to fall before a life insurance policy?
Absolutely. I've had many of these conversations even over the last week where I give a range of recommendations, and I'll say in my meeting, but if you're not going to do anything else, do this, because at least that's the most fundamental. The next is things like life insurance, make an emergency fund, stuff like that. This is the toughest insurance to get. It's also the most likely insurance to actually have to come into effect in your lifetime. That's why it's the toughest to get. So do this, number one, first thing now. If you can't qualify, we'll figure out other solutions. But this is the first thing we tackle.
Awesome. Well, Ben, this is great. I'm going to make sure we drop all your information in the chat and inside of in the YouTube link here and everything like that. So everybody, thank you for popping on for this one. We'll come back next week and we'll talk about some more stuff. So anyway, Ben, thank you very much. You're going to stop our recording. We'll see you next time.
Thank you.